Hello guys, welcome to my world, welcome back to my world. My name is Martin Jones and this is P2 Corporate Reporting, the London School of Business and Finance interactive product, and I am here to present to you on P2 Corporate Reporting ACCA P2. And over my shoulder, about to appear now, here we go, I'm going to press a button. Ta-da! I get sucked into a corner and there is a slide that proves my point. Yes, I really am Martin Jones. This really is P2 Global Live Sessions, and there is my email which you can use as often as you like. Please feel free to do so. And I'm sure you know the drill by now. Oh, excuse me. Tail end of the cold. I'm sure you know the drill by now. I'm going to flick through some slides to show you what you have done and what you are going to do today. So there you go. Oh, that didn't work. Let's try again. There we go. Basic groups was on the first evening with a little bit of a hangover into session 2, where we finished off basic groups doing the complex subject of changes in ownership, and we also did, the formal complex group with parent by sub, sub by sub, sub. Yep, that happened. Last time you saw me actually, and we finished with complex groups, and I remind you of the fabulous question Ronette, the homework question Ronette, beautiful question, and that brings us to this evening, which as you can see is foreign currency. But in fact actually what I'm going to do is look forward to next time I see you, which is next Thursday. Next time I see you, which is next Thursday, we're going to do that, or should I say we're going to do that, which is a lot, isn't it? Cash flow statements and current issues. Current issues really strange and nebulous subject, is very hard to get hold of, and it needs 3/4 of an hour. It needs an hour if we have it. And cash flow statements, we're going to do one. The one that we're going to do is that one up there. We're going to do the question called Squire, and it's full on, you know. No, we're not doing question Squire. That's right. We're doing the question Ducky. But the reason I'm telling you about next Thursday is because I'm actually going to cheat. Because there is so much to do next Thursday, I'm going to get a little bit ahead of myself this evening. If I just take you back to this evening, you've got Forex, right? Forex is not dead easy. No, it's not dead easy, but it's actually fits quite nicely in about an hour and a half, something like that, which leaves half an hour at the end. So what I'm going to do with that half an hour is get ahead of myself and start to look at cash flows in preparation for cash flow statements next Thursday. So that's the plan. Anything more I need to say? Don't think so. You know the drill. Over my shoulder I also have the class notes. I'm going to prove it right now. There they are. And as you can see, I've just scribbled on them just to test my pen is working. And there's the opening page. It's actually sort of halfway up the opening page, isn't it? So there we go. More proof that you're doing corporate reporting with me. And I've got the paper notes here in front of me, which I find really helpful for me. It's terrible really, but I do find the tangibility of paper notes really works for me. Terrible on the trees, but it's true, I do prefer paper. And of course we're doing the chapter called Foreign Currency Translations, and I can see I've just fallen to roughly the right page, but not exactly the right page. And it starts on page 49. There we go. So I'm going to go and find page 49 just to get the heading in front of us. How do I do that? I think I do a drag down here with this program. It's going to shoot past you, and it's probably quite annoying actually. But there we go. What can I do? That's how this program works. 49 coming up. Oh, it's just a bit too much. There we go. More proof we're doing foreign currency translation over my shoulder. And then if we skip down, you can see that we're going to be talking about foreign transactions and foreign subsidiaries. I'm going to talk about those two things using the communication tool you see in front of you. I'm going to use the pen. You know the deal. Everything that you really need to know, I will write it down, but everything I write down, you really need to know. So here we go, let's get writing. I also have a blank journal there, nicely lined and ready to go. Like I say, I do unfortunately have the tail end of a cold. I'm now going to blow my nose. How do I do that without that going straight into the microphone just on my tie? Not easy. I will try not to blow into the microphone. Excuse me. I can actually see myself blowing my nose there. I just invite you into my world. You can see there's a complete white. It's like snow behind me. That is not imaginary white. There really is just a white painted wall behind me. White to my left, white to my right. Right in front of me is the unblinking eye of the camera, and there's actually an image of me right next to the camera, so I'm kind of teaching myself, which is cute, helps me to keep my concentration. And on the left hand side is your chat, including a little screen which has got a very, very short delay today, which seems to tell me that this streaming is coming through really beautifully, which I hope is true at your end. It certainly seems to be fantastic at our end today with hardly any delay. That screen is coming to me. You can't see what I'm pointing at here, but I'm pointing at a little mini-me that is now talking to me. And that mini-me has gone through that camera, through the computers out there, through the servers in goodness knows where, back through the internet and back onto my screen over there with almost no delay. So it's obviously program streaming wonderfully today, according to what I have in front of me. It's fantastic. And just below is the chat. So I'm just going to say hi to all you guys. Here we go. Yes, hi guys. I can see we've got Ayan and K-Shag. I think did I see you, K-Shag, or hear you, see your name on Tuesday? Am I right in thinking that? I can see Chrissy. I can see everyone there. Hello guys, welcome. Let's go and enjoy some Forex. Foreign currency translation. There are two issues which are kind of considered like two separate subjects within the same IFRS. There is foreign transaction translation and foreign subsidiary translation. Goodness me, the delay on the internet is so little, I can actually just see me saying goodness me. I can see me picking up my cup of tea. That's incredible. It must be like no more than a second or two, the delay. Well, I really hope the internet is working as well for you as it is for me. So, there are two subjects, as you can see over my shoulder, and both of them are highly practical, and therefore, naturally enough, doing this subject, corporate reporting, we're going to learn how to do these things by bashing a few examples. And I have a few examples up my sleeve, as usual. But recently, as in Tuesday, when I was teaching this to the Tuesday class, the online Tuesday class, I experimented with teaching all the theory up front, because there is actually some theory with this subject. And it seemed to work so well, I'm going to experiment with that again. It does require a little bit of patience on your side while I bash through this theory, but it seemed to work on Tuesday, so I'm going to experiment with that idea right now. I'm going to give you the theory up front, and then we'll do the practical examples, and then we're done. And then we can go into cash flow statements. That's the plan. Okay, so here we go. Foreign transaction translation. Foreign transaction translation. Foreign transactions are translated into the entity functional currency and then foreign monetary items are retranslated and even though that uses fairly technical language, to me that already sounds quite intuitive. Although there's no doubt about it, the expression monetary items is jargon and requires translation. So that's what I'll do. I'll translate that phrase right now. So here's monetary items. Monetary items, there are three. And the three are money, receivables, and payables. And I have been using my wife in order to illustrate the ideas of this, and it works very well because she is Chinese, Singaporean, British, or at least that is how I have been labelling her this term, and I keep forgetting to ask her what she calls herself, so I must do that when I get home this evening. Darling, what do you call yourself? Do you call yourself Chinese, Singaporean, British? And I'll see what she says. But I think that's a good descriptor of her. And the middle word gives away a clue. She has Singaporean heritage. In fact, her mum is in Singapore. And being a good daughter, she has a little stash of cash in Singaporean dollars that she keeps here in London, actually, but in Singaporean dollars, just in case mum gets ill. Or, you know, Lord forbid that anything should happen to mum, but just in case, there's 20 grand of Singaporean dollars in Citibank, actually. Where's Citibank from here? Which way is north? So it's over there. So over in Citibank, over there in Canary Wharf, in Citibank in London, actually, there are Singaporean dollars in my wife's name, 20,000 of them. And naturally enough, as the exchange rate goes up and down, my wife does feel richer and poorer as the Singaporean dollar goes up and down. So she's automatically translating and retranslating at each measurement point. You know, it's a very natural thing. And of course, money goes up and down in value, fairly obviously. So does receivables, but actually the one that the examiner examines over and over again is payables. He has an obsession with payables. So for our purposes, it's really just foreign payables. Foreign payables are translated and retranslated at each measurement point. For us, it's payables. And that's it. You're finished. That's all there is to know about that subject. It's done. So now let's do the theory of the next subject. Foreign subsidiary translation. foreign subsidiary translation. The foreign sub-FS are then translated into the presentational currency as follows. And the process is highly intuitive. Oh, I need another page, and then I'll go up. There we go. And the process is highly intuitive. There are two FS that require translation, and they each use an obvious rate. The two FS are the balance sheet and the P&L. On the balance sheet, it is at a point in time. So at the year end, we use the rate at the year end, which is called the closing rate. And on the P&L, which is over the year, the P&L is over the year, we use the rate over the year, which is called the average rate. And look at that, you now know absolutely everything about foreign currency translation. You know everything about Forex. That's all the theory that there is. It's not an enormous amount, is it? Well, that's not entirely true. You certainly know all of the essentials now, but what I'll do is I'll start to add in a little bit of the fluff, which does get regularly examined. There's a particularly absolutely lovely question which may be waiting for you in December, which asks you to discuss this thing. I'll go up and have a little look. Went a bit fast there, but not too much. Can you see this phrase here that I used without discussion? It's functional currency. Can you see that one there? The examiner often asks questions about functional currency, often as in, 3 times in the last 5 years, which is often, isn't it? That is really often. I hadn't really thought about it like that. So really often he asks this question about functional currency. So what is a functional currency? How does that work? So that's the next thing we're going to do. So a discussion about the functional currency, that would be a lovely question. Really, really simple idea. The functional currency is the currency in which the entity functions. That's it. What, that's it? Well, that is the definition. But the textbook definition is not quite so useful. It's not great, actually. It is the functional currency is the currency of the primary economic environment. The functional currency is the currency of the primary economic environment. And those are lovely words, and it certainly is a big fancy definition, but it is not really as useful as the former. The real definition is the former. The functional currency is the currency in which the entity functions. But there is a misnomer about this title. Is it a misnomer, or is it just the way things have to be? I don't know. See what you think when I get into it. It's to do with that letter there. You see, there is no S on the end of functional currency. It is functional currency. I've not made a mistake. And there isn't a single entity in the world anymore that functions in one currency. So let me get you into this by talking about Starbucks UK. I was talking about Starbucks UK on Tuesday. Yeah, Jürger's here on Tuesday as well. So Jürger will have heard this story before. Sounds like some of you were having problems with the internet, but I have to say it looks absolutely fantastic at my end. Really, really good. You know, I've been in the studio a number of times so far, and I've never seen the internet so good as it is today. It's fantastic. At least at my end anyway. So functional currency, the one I'm going to go for is Starbucks UK, and it works so well I think I'll just use it again, even though I did use it on Tuesday. So I'm going to make up a little story. I'll change it slightly actually for Jürgen, but not much. So Starbucks UK obviously sells coffee here in the UK to UK people. So the sales are in pounds, it pays its rent in pounds, it buys its electricity in pounds, it pays its employees in pounds, and it buys its cakes in pounds, okay? But we're just going to say, just for a little bit of fun, that it buys its coffee predominantly from Kenya in Kenyan shillings, all right? So it functions in pounds, shillings. So what you see over my shoulder is a lie. There isn't a functional currency. There are two functional currencies. Starbucks UK functions in two currencies. It's a fact. So what's over my shoulder is a lie. Yes, it is true, it is a lie, but you do have to work out which currency you're going to use for your FS. Oh, yes. And the name of the currency that you use for your FS is the functional currency. And the functional currency is the currency that dominates the functions. So, which dominates the functions? Well, in a kind of outrageous football score, we've got a 5-1 victory to pounds, and therefore pounds is the functional currency. Actually, in real life, the functional currencies are the pound and the shilling. However, we must select which one dominates. Very clearly it is the pound, therefore the pound is the functional currency. So what that the pound is the functional currency? The effect of this is that the entity Starbucks UK will produce its FS first of all in UK pounds. But then it is, of course, a foreign subsidiary as well. Starbucks UK is a foreign subsidiary. And Starbucks US will say to Starbucks UK, so I'm going to be US for a second, "Oi, you guys, I want you to give me your FS in my currency." So that's what the boss is saying to me. The boss is saying to me that they want my FS in their currency, and their currency is obviously the US dollar. So what I will do is I produce my FS first of all in UK pounds, and then present the FS to my shareholder, Starbucks US, to my shareholder, Starbucks US. I'll present my FS in US dollars, and that's the process. Okay? So going down, what the examiner actually examines is that fella, the functional currency, which we've covered. I'm happy with that. Functional currency in the bag. And I can see there's no questions so far, which brings me to the yeah within this subject. There is a really horrible kind of parallel subject to Forex that we have to address now. So let's stop dithering and just do it. Here it is. It's horrible, but here it is. It is performance reporting. It is performance reporting. And what is going to happen is I'm going to tell you about performance reporting and how it relates to Forex right now. Then, not next time I see you, but the time after that, I'm going to go into performance reporting and give you a lot more about it. Which brings me to what is happening next week. As you know, of course, last Thursday had to be cancelled because the computer died. We're actually completely brand new computer just down there to my left hand side, just by my foot. And although it's in the same old tower box, the actual the motherboard and all the other hardware components within this tower have been replaced. In fact, if I dare pick it up, there's one of the boxes showing you that, you know, new hardware has gone into that computer down there. Which, fingers crossed, means we'll have a perfect evening. But what happened last Thursday was, I sent you an email. It was rather disappointing. I was all here with I had a red tie. I got an orange tie today. I had a red tie and I was sitting there all ready to go, and then, you know, the computer just wouldn't start. It started, then it died, and it started, and it died, and then it wouldn't start at all. So we had to call off last Thursday. But how are we going to make up the lecture? Well, obviously there's tonight, and then there's next Thursday, but there's also, have you seen on the sequence, there's the following Friday. So I'm coming to you live twice in 1 week. So I'm going to see you tonight, obviously, I'm seeing you now, and then again Thursday, fine, but then I'm also seeing you Friday at 6:30 UK time the following day, so there's 2 next week. So coming to this fella over my shoulder, performance reporting, you'll be seeing not next time I see you, but the time after that, which means Friday. So Friday, you and I are going to go into performance reporting in detail, but just at the moment we're going to get a flavour of it because it relates to Forex. Because there are 2 performance reports and 2 forms of Forex. Forex, for those of you who've not heard the expression, is the standard abbreviation for foreign exchange. Also, probably even more commonly known as FX as well. And there are 2 forms of Forex. The 2 forms of Forex were right up there. You remember what I said. There is foreign transaction translation and there is foreign subsidiary translation. Those 2 fellas go in the 2 performance reports. So what are the 2 performance reports? Well, there is the P&L and there is the OCI. P&L stands for profit or loss, very familiar to most people, and OCI, unfamiliar to most people. It's other comprehensive income. The way that these 2 are communicated as a pair is widely inconsistent all across the globe, which is incredibly frustrating. But the way that the International Accounting Standards Board would like it to be done is how it's done across the road at Sainsbury's. And it's the Sainsbury's model that the examiner examines. So let's look at the Sainsbury's model. It's a very simple idea. 1 page. There is 1 page for performance. 1 page. And that 1 page for the top 3 quarters has the usual income statement known as the P&L, and then there's the dumping ground at the bottom called the OCI. Dumping ground is the examiner's expression. So there's the P&L and OCI on 1 page, 3 quarters of a page, 1 quarter of a page. What goes through the OCI? Well, I'll tell you all about that next Friday. But there's one thing that does go through the OCI, and that is Forex. But which one? There are 2. Exactly, so we line them up now. I didn't line that up exactly perfectly, but never mind. So you might remember me saying foreign transaction translation. There is essentially payables. Do excuse me if I just coughed into your ear just then. I am terribly sorry. I'll try and remember not to do that. Move my mic next time I cough. Foreign transaction translation. The retranslation of foreign payables, basically, keeping it simple. And this one is the foreign subsidiary translation just isn't simple. It is the retranslation of the cost of investment in foreign sub. And as you can see, that is not simple. But it's not quite as hard as it looks. How will I be able to illustrate this to you? Fairly obviously, you've guessed I'm going to do a question with a foreign sub. But not first. Before we do foreign subsidiary translation, let's do foreign transaction translation right now. So now we're going to start doing examples. So the theory's all in the bag. Absolutely all the theory's done now, so I can rule off and congratulate myself on having ticked that off. And go and teach you some examples. Get myself a nice fresh new brand new page. Here it goes. Fresh new brand new page. Baja! There we go. And if you turn over the page to page 52, I think my pages are sticking together actually. And I'll go and do that over my shoulder. If we turn down to page 52, there we go. We have 3 questions actually. I seem to be able to get 2 on at the same time. Actually, I can cheat and use this function, can't I? So there we go. There's the 3 questions. We have the 3 questions, furtive, feature, and feature continued. And you've probably guessed what I'm going to say now. Those questions are already recorded to the library, and if you wish to work more on foreign transaction translation, then please do work these 3 little baby questions. However, I think you will be content with this subject once you have done 2 examples. What I propose to do is just make up 2 examples and solve them right here in front of you. Okay, so that's the plan. Here we go. So I'm going to make up 2 examples and solve them in front of you. So first of all, I'm going to give you a heading. Foreign transaction translation. So, foreign transaction translation. Example 1. I'm going to make it up. Just to reinforce that, I'm going to make it up. An entity buys plant on credit for, and then the examiner will make up a currency, so like 450 Zooplas, and then he'll give you exchange rates. At delivery, we will have $1 is equal to, 10 Zooplas, And then at the year end, the exchange rate has moved, where $1 is now buying 9 Zooplas, and he'll make up an exchange rate. Sorry, not just an exchange rate, but a currency. He'll use the dollar, of course, but the other currency will be fake. Generally speaking, it's fake. Sometimes it can be semi-real, like a dinar, but usually it's made up like a kram or a zloty or something he makes up. And there we go. The requirement required is a bit scary, very scary. What is required is journals. Uh-oh! But it's cool because the answer is derived from what hopefully will be a relatively familiar bit of information management called a Forex table. What I do is I measure the zlotys using a rate into dollars at different measurement points, one being delivery and the other being the year end. What do I owe the foreign supplier at delivery? I owe him 450 million zlotys. What do I owe the same guy a few weeks later at the year end? I still owe him exactly the same amount in his currency, but it feels different because of the change in the currency rate. So when I divide by 10, I get 45. And when I divide by 9, I imagine I get 50. But I'm not absolutely sure. Isn't that embarrassing? So I better go and check on my calculator because I'm feeling a bit naff. But it is, I'm sure. No, I'm sure, but I'm not quite sure. 450 divided by 9 is indeed 50. That was a bit naff, being a bit unsure about that. I could have just multiplied 9 by 50 and I'd got 450. But there you go. I am an accountant. I feel the need for a calculator. And oh, you look at that. I've got a sausage of 50. Whoa, whoa, whoa. I've got a negative looking fella in brackets there. Is that a Forex loss? It certainly looks like it, doesn't it? Yes, indeedy. What it feels like I owe is now 50, whereas it was 45. So the feel of the liability has gone up. Is it good to owe more money? Of course not. And therefore therefore we have a loss because of the increase in the feel of the liability. There we go. And that's the logic of what's happening. But to really nail this, we need some double entry. So we'll have a delivery journal. Oops. A delivery journal. There we go. Is that right? Delivery, yes. A delivery journal. With a debit and a credit. To recognize the creditor, I credit creditors, I credit the payable. And of course, the only information I have at the point of delivery is the delivery information of 45. So I recognize the feel of the liability as being $45 million. I don't actually owe $45 million, I owe 450 Zooplas. But it feels like $45 million. And the cost of my PPE is also 45. But then what I do is I retranslate that. I must admit that that line is bothering me. Perhaps I'm being slightly naff worrying about that, but I seem to be worrying about it. So why not do something about it? Tools, pen. My pen's not working, not quite properly. Just give me a second, I'll see if I can sort it out. So that. Pen options. No, eraser options. There you go. Delete strokes. There you go. All right, just give me a second. Oja, oja. There we go. All right, perhaps I'm being slightly naff here. It's bothering me that that's looking ugly. And now the year end journal. Oh, what we want is for our creditor to go up. To make a creditor go up, you credit the creditor. It's already 45. We want 50, so we need another 5. And that creates the loss that goes into the P&L report. A P&L report, like the one opposite at Sainsbury's, goes operating, financing, tax. Operating is what they do, so in the case of Sainsbury's, it's retail. Tax is obviously tax. Financing is interest, but it's also speculating gains and losses. And this fella here is a speculating loss. A speculating loss. A forex loss is a speculating loss. So it goes into the middle of the P&L in financing. Something like that. There we go. Great. Mellow. Let's do it again to reinforce it. So example 2. Great. The examiner always does payables, as I say, and he usually does PPE as well. But let's just have stock for a bit of variety. An entity purchases stock for 240 million grots. 240 million grots. On bottom of the page there, so fresh new page, there we go. And then up again. And we have a delivery rate of $1 buys. I'm going to use 6 and 8. 6 and 8? 6 and 4. But I just want to see which way I went. I'll go the other way. That one went 10 to 9, so I want to go from 6 to 4. No, the other way. I want to go from 4 to 6. Whoops. So buys 4 grots. So year end, $1 buys 6 grots. And required is journals, which I will do on the second page. Here it comes. I'll just get into that with a Forex table. Here we go. So my answer will be constructed around a Forex table. And it's 240 grots that I owed at delivery, and I still owe 240 grots at the year end, but the rate has moved from 4 to 6. 4 to 6. When I divide by 4, I divide by 2 and then by 2 again, so that's 120.60. And when I divide by 6, I get 40. Yeah, there we go. And I put a sausage around that 40 because we're deducting one from the other to get a difference. The difference is 20, and it looks positive, and it is positive. That is indeed a Forex gain because the feel of the liability has come down. It's good news to owe less. Now we deliver the delivery journal. And this time we want our credit balance for the creditor to come down. And to get a creditor to go down, we debit the creditor. And that creates a corresponding credit that pops up in the P&L. It's a forex gain. And it will go to financing. Really good. All right. Good stuff, guys. Most of you seem to be doing pretty well. A couple of you guys struggling with the internet at your end, it appears, which is always disappointing, isn't it? I live in central London. I actually cycle to and from work because I live so close. And even though I live in central London, I have third world internet connection. I don't do it so much now because I've got a kid, but I used to do a lot of backpacking. And honestly, I've had better connections in the back of beyond in India and Africa than I do now I live in central London. It's shocking, my connection. So, you know, I also use this, you know, not just YouTube, but I also use this as well. I actually look at recordings of P7 and P3 and other things. I'm just interested in seeing what the other guys are doing. So I know it can be very frustrating when, you know, when you get a slow connection. Obviously, I'm looking at it on the recorded, and it can still be really frustrating, but even more frustrating on the live. So you know, I hope your connection improves, and hope you have a good session for the next hour, because we're doing well. Any questions at all on the stuff we've just finished over my shoulder? It's all right, isn't it? Not too bad. It's okay. Not too bad. Exactly. That's the subject of foreign transaction translation completed, and now we do foreign subsidiary translation. This time, however, I am going to use the questions in the pack, and the one I'm going to turn to is called Kenya. So I'm going to go and find Kenya and pop it up in front of you. Does that work? Yep, there we go. So page down, baja, another one, another one, another one, oh, there we go, just at the bottom. Here's Kenya. Now, obviously, that's a bit too small for your screen, especially if you're watching on an iPad. So I'm going to go in there now. So here we go, Kenya. Kenya owns, let's start at the bottom with the requirements. There are, in fact, 3 requirements in this question, and I'll tell you why. We're asked to prepare a consolidated statement of financial position. That's a bit naff. I don't like that heading. Just let me do this again. There we go. Position. That's more like it. That's a bit more bold. Oh, excuse me. A consolidated income statement and also a consolidated movement on reserves. Now, you might recall me saying to you that there are essentially 2 types of question. One, there is either the P&L or a balance sheet. But that's it, you see. The examiners conference was not that long ago. Was it only this? It feels like a million years ago. But it was only in February this year. Gosh, it was only February this year. And the examiner confirmed yet again what he has confirmed every sitting for years and years and years, which is no, there will not be a question which is P&L and balance sheet. There could be, in theory, you could write a question that would work quite well that was P&L and balance sheet. In fact, we have one in front of us that is P&L and balance sheet. But no, the examiner says it's one or the other. But which one? We don't know, so let's do both. So the question, Kenya, is both to cover both angles. But what doesn't get examined these days is the glue between the P&L and the balance sheet. And the glue that is between the balance sheet and the P&L is called the movement on reserves. And it is really quite tricky, actually. Now, I'm just going to ask this question. I asked this question on Tuesday, but there wasn't that many people there on Tuesday, but I can see online at the moment there are 23 people watching. Amongst you 23 guys that are watching, do any of you deal with foreign subsidiaries? Do any of you actually deal with foreign subsidiaries? Either you are a foreign subsidiary with an overseas parent, or you are the parent consolidating foreign subsidiaries. Do any of you deal with foreign subsidiaries? Now, while you're typing in the answer, I'll tell you the story. You've probably guessed that there aren't just 23 people watching this live. There is 100 or more that are going to watch it at the weekend recorded. And some of those guys that are looking at this particular lecture are looking at it for two reasons. Obviously, number one, all of us agreed, we're looking at this question, Kenya, in order that we can pass the P2 examination. And that is our focus. But if what you do day in, day out is foreign subsidiaries, then naturally enough you're going to look at it primarily as an exam passing exercise, an academic exercise, and therefore your focus is going to be on income statement and position statement, naturally enough. But if you're dealing with foreign subsidiaries day in, day out, you want to know, for work purposes, you want to know not just how to do the P&L and the balance sheet, but how to connect them, which is why recorded in the library is a full answer which does all three of these. So if you look at the full answer, you don't have to, because I'm going to do this with you now, but if you are working with foreign subsidiaries and you want to know everything about what you do rather than just the examination part of what you do, then recorded online is an answer to Kenya. It's me, of course. Recording online is an answer to Kenya, where I do all three of these. I do the position statement, I do the income statement, and then I connect the two. And the connection of the two is really quite complicated. That's what's really difficult about Forex, doing the movement on reserves. But because the examiner in P2 is not interested in that, we take the same attitude. So we're just going to do the two yellow fellas because that's what the examiner is interested in. Enough of an introduction. Yeah, look, there's loads of you guys that work with foreign subs. Loads of you. Well, I say loads, there's 4, which is still quite a lot, isn't it? It is very, very common, guys. So it's entirely up to you. If you're comfortable with what you do at the moment and you don't feel you need any further prompting for the workplace, then you don't need to look at the recording for Kenya. But if you do want to, really get into this, then the recording for Kenya will do the answer to Kenya absolutely to the nicest, tiniest little detail, way beyond what is required for P2. However, in the online classroom, the live online classroom, I'm going to stick with the P2 stuff, which is position and income statement. Okay. Up to the top. We look at that, we have a percentage. When we have a percentage, we check out control, the game. Kenya owns 90% of the ordinary shares, 90% of the ordinary shares of a foreign subsidiary, Malawi, which is the functional currency of the kwacha. So what do we need to say about that? 90% is sufficient to give us control in simple groups, 10% would be the NCI. Fine. The subsidiary was acquired at the start of the current accounting period. You see that start there? Usual thing, it's almost always start. For a figure of 1.2 million kwacha, I'll highlight that, 1.2 million kwacha. Fine, yeah, whatever. Don't really like this red, it's a bit overdoing it. Orange would be better, I think. At the date of acquisition, the fair value of the net as subsidiary were 1 million kwacha. This included a fair value adjustment in respect of land. So there is an FVA, and that's a tricky detail which plays havoc with us in the middle of this answer. The land has not been sold. Goodwill is estimated to have an infinite life, but has not been impaired. It's the group's policy to value the NCI at fair value. I will definitely stick this into the chat. What is the name of the policy? Is it full or is it partial? Is it full or is it partial? I expect quite a quick answer here because I can see my internet is so quick. I can actually see me leaning over talking to myself. But, oh, brilliant, so quick. The answer's so quick. Yes, indeed, it is full. Very, very good. It's full goodwill as it always is, as it almost always is. And then we have a position statement and an income statement, very, very compressed position statement and very, very compressed income statement. I think I'll do a Q&A against myself. For what do I need the 2.2? That's the P&L. For what do I need the 2.1? That's the balance sheet. For what do I need the 2.4? Ooh, I don't know. Why would I? The year start is not just the year start, it's the acquisition date. What beginning with G hits the balance sheet at the acquisition date? Of course, the customers join our group. Their goodwill hits our balance sheet. So the 2.4 is for the goodwill. All right, that's enough yabbering away. Let's go for it, guys. Enjoy. So fresh new brand new page, shall we? Ah, very good. So here we go. Question. Kenya. I've been working on my PDF, so I'll just turn over to the paper version, so I've got that with me. Nice stuff. So we're going to do the net assets. Remember, abbreviations are fine. The net assets at acquisition and at year end to help me measure the growth in the entity. Share capital doesn't change, and the share capital in Malawi at the current year end is 50, and if at year end it was 50, it'll still it would have been 50 at acquisition 12 months ago. It's a bit of a mouthful, isn't it? So it's 50 now, so it would have been 50 at acquisition. How do we know? Because it never changes. Then the reserves, or the retained earnings, they were 1050 at acquisition. I'm struggling now. They were 1050 at the year end. What were they at acquisition? What's the yellow figure missing here? Well, we have to go into the question. If you've had experience of playing with these kind of questions, you are at a slight advantage because you know roughly where to look. You sort of force your way into the point of acquisition, and there's the figure there for 700,000. The reserves were 700,000 at acquisition. So 700,000, 700,000. And then we know for a fact that there is an FVA on land. But what we don't know is the figure. What we are told is that there is a figure of 1 million as the fair value of the whole entity. This is the fair value of the whole entity. Is that blue quite nice? It's not too bad, that blue, is it? So that's the fair value of the whole entity. Where did I get that from? Of course, I got it from the question. Let's go and have a look at the question. Here it is. Ta-da! Can you see that we have a figure of 1,000 kwacha? But that figure there, 1 million kwacha actually, is the fair value of the net assets, the whole net assets of the subsidiary. We know that this included an FVA, which is in respect of land, but we also know that we don't know how big the FVA is. So what we do is we go back to our schedule and play around with some colours basically. This fella of 50 came from the books. This fella of 700 came from the books. The value of 750 that comes from the books is called book value. That 750 is the book value. And we know for the question that the fair value is 1,000. And there is a difference of 250 between the book value and the fair value. What is the name of the adjustment that fills the difference between the book value and the fair value? The name of that adjustment is FVA. And you can see in this case, it is calculated as a balancing figure and is 250. For me, that is a completely naff way of conveying an FVA on land. If I was the examiner, what I would do is I'd tell you there's an FVA on land of 250 and you'd just get on with it. But your examiner very frequently tells you what the FVA is on, but not what the figure itself is. And therefore you have to work out the figure as a balancing figure. You have to work out the figure as a balancing figure, as you did over my shoulder just above. It's on land, it's non-depreciating, and therefore that FVA will stay still. Adding down, we get 1350, and therefore 350 as a growth. And we don't split this growth yet. Good stuff. Then we do goodwill. Something like this. Oh, wait a second. Now we've got the figure of 1,000. Let's slot it straight in without any further ado. That was good. NCI. We can get that. We just copy it from the question. What did it say? The fair value of the NCI at acquisition was 133 kwacha. 133 kwacha. 13... What? 133 kwacha. Oh, of course. There are currency issues here, and we haven't considered them at all. In fact, what we've been doing without hardly thinking about it is automatically working in kwacha. But what is it that we are trying to calculate? Well, of course, what we're trying to calculate is this green fella down here. We're trying to calculate the goodwill. But what is goodwill? Do you remember the idea that goodwill is the loyalty of the people down in the subsidiary? The people down in the subsidiary, but particularly their loyalty. And where are the customers in kwacha land? Well, the customers in kwacha land are down in kwacha land. So what currency should we be using? Kwacha. What currency are we using? Kwacha. What's the problem? Well, there isn't one, but there is one. And it's to do with the top line, which I will highlight in gold. I'll highlight in yellow up here. And just remind yourself of the split. Do you remember it was 90, 10? So what I want to know is how much I spent in order to get my 90%. And what we do, very naturally, is we go to the face of the question, face of the balance sheet. I'll get rid of all that colour because it's quite distracting. Go to the face of the balance sheet and pick up this figure of 500,000 shillings. Oh, wait a second. It's the right figure in the wrong currency. Can you see? That's the investment in Malawi, but measured in shillings. Actually, that figure there of 500,000 is not what we spent. That is the translated shilling equivalent of what we spent. What we actually spent was a number of kwacha. And to work out the number of kwacha that we spent, we need to use the exchange rate of 2.4 down here. Giving us this calculation here. Giving us this calculation here. I seem to always do this in red, so I'll do it in red. So it's shillings 500,000 multiplied by 2.4 gives us 1,200, 1.2 million. Wait a second, that sounds a bit familiar. Actually, it is. In this question, the figure of 1.2 is given. And the fancy red lettering that I just did a moment ago is gratuitous. I'm going to highlight that in shocking pink. That figure of 1.2 million kwacha, oh sorry, I've dribbled it onto the screen there. That figure of 1.2 million kwacha is already given in the question. And sometimes it is and sometimes it isn't. Sometimes it is, but usually it isn't. So that figure that you do have, you usually don't have. So you don't have it at all, and you have to do, you have to calculate this fella yourself. So what would happen if you had to calculate this fella yourself? Well, you'd calculate this fella yourself as follows, using that one there, okay? So if the 1.2 million is not given, you can still calculate it by doing that kind of calculation. Adding down, we get a goodwill of 333. And that is what goodwill is at any point, because, you know, goodwill flat lines. Do you remember that idea? What's the goodwill at acquisition? 333. What is it in the middle of the year? 333. What is it at the end of the year? 333. It is not remeasured because it is considered now immeasurable, is the concept there. So 333, 333, 333, flat lines. But when you get to the year end, you're going to have a slightly twisted process as regards the 333. This 333 over my shoulder is the measurement of the 333. What you're going to do now is you're going to communicate the 333, but you're going to communicate it to the guys up in Nairobi thinking in Kenyan shillings. So when you're speaking to, when you're speaking to people, try to speak to them in their own language. These guys, that your shareholders, they think in Kenyan shillings, so we want the shilling equivalent of that at the year end. Oh yes, of course. What I want is a group position statement, and the position of the group position statement is the year end. So the goodwill is 333 fundamentally, but I want to communicate it to people who are thinking in shillings, and therefore I divide by the rate at the year end, which is 2.1, because the position of the position statement is at the year end, like that. Okay. And I don't really need my calculator here because I've done this already on Tuesday, but let's just do it. Let's just fake this. 333 divided by 2.1 gives 159. Gives 159. And then we have other net assets. Where the 17,500 is already in dollars, but obviously the 1,100 is not. And clearly I should be very careful to divide that by 2.1 as well. That is absolutely dead right, but it's kind of part of the problem, if I may suggest. What tends to happen when students have a foreign currency is they're actually very good. They're usually very good with the foreign currency element, but what tends to happen is they forget about their other basics. So classically they forget about their PUP, their provision for unrealized profit, and they also forget about their FVAs. Of course, this 1,100 includes the land, and the land was subject to an FVA, and that FVA was a figure of 250, and that's in foreign stuff, and I guess that should be divided by 2.1. In fact, that's a bit of a naff way of presenting this calculation. You can do it that way if you want to. It's the first time I've ever written it like that, but it is a bit mathematically naff. I'm sure you've guessed that the way to do it is to add those two figures together first and then divide by 2.1. In other words, it's 1350 divided by 2.1. So 1350 divided by 2.1 gives 643. But the trouble is, if I round that one up and I round the 159 up, I already have rounded the 159 up, so I'm going to round this one down. And you know the game here. I've done this question before, haven't I? So I know how to make this balance. Making it balanced doesn't make any difference, but it'll make you more comfortable. So 642 plus 17,500, that's going to give 18,142. So that would give me 1, carry 1, 0, carry 1, 3, 18,301. That does sound familiar. Good. 1,200 is also given in the question. Exactly, Keisha. And then we go to the bottom of the balance sheet and we do equity. Ooh, a full equity. Our first time to do a full equity. share capital, first of all, is the parent share capital, because the group position statement will go to the group shareholders. 70. And then the next easiest thing to do is definitely the NCI. So we'll do the NCI. I'm going to do the NCI on a fresh, brand new page because I come to the bottom. Okay, cool. So now the NCI. The NCI is simple roll forward. And you might remember how to do that. I seem to have a bit of a thing about highlighting in red when I do this, hooping in red. So I'll do my usual there. So we need 133, 10%, 350. 133, 10%, 350. But the trouble with anything related to this subsidiary is it comes out in kwacha, and we want our product in shillings, and we want to measure the NCI at the year end. So we use the rate at the year end, which is 2.1. We use 2.1 yet again, which I seem to remember comes out really cute. Yeah, 80, that is cute, isn't it? Exactly 80. And then we do this thing called reserves. There are two reserves. There is the RE and the OCE. Excuse me. The RE and the OCE. And what we do is we copy the parent data. The parent has a retained earnings of 17,930 and an OCE of 0, which looks a little bit odd, but I'll talk to you more about that once we have some numbers there. It becomes obvious why that's 0. And then we pick up the sub growth. Because of the way we've approached this question, it's probably easiest just to steal that sub growth from just above, just here, like that. So let's have a bit of that. So we're going to go, where are we now? There we go. So it's 90% of 350. But rather shockingly, this figure here of 17,930 is already in shillings, and therefore we have to divide this 350, which is in kwacha, we have to divide it, it's another 2.1. Times by 90, 150, 150, 150. And then we have the 4x. And the 4x is a working within a working. And I am always surprised at how many students get this right in the examination, because it is not at all easy. 4x. It is, I'll tell you what I want to do. I want to go and re-highlight what we've highlighted already and say the thing in context with the thing. So the thing I'm interested in is this thing at the top of the P&L. And I will make it look completely disgusting with some pink around it. Do you see that 1200? What we want to do with that 1200 is we want to ask ourselves, what is that 1200 worth now at the year end, and what was it worth when we bought it? That fella up there, what's it worth now? What was it worth when we bought it? That thing, what's it worth now? And what was it worth when we bought it? And that will create a 4x difference. And it's the one that I'm referring to down here. Here. So we're going to measure at the year end, and we're also going to measure at acquisition. It's the same figure in kwacha. It's 1200 and 1200. But what I want to know is, using appropriate rates, is what is it worth now in shillings and what was it worth when we bought it. So to get what it's worth now, we divide by 2.1. Yet again, we use that 2.1. Yet again, 1200 divided by 2.1 gives 571. And of course, we need to divide by 2.4. And we go, divided by 2.4 equals exactly 500. It's the same figure on the balance sheet. We don't really need to actually do the calculation because it's the figure on the balance sheet. And the difference is 71, and it looks like a forex gain. And do you know what? It is a forex gain. The asset is worth more now than it was when we bought it. It's a forex gain. The asset has risen in value, and it is therefore a forex gain. And that forex gain is the one that I was talking to you about earlier. Whoa, really techie. It is the forex gain that goes through the OCI and therefore to the OCE. Wow. All of a sudden, the language of this question has gone off like a rocket. And this is a great way to get into performance reporting and equity recognition. Really good way of getting into it. And reinforcing this is that fabulous question from, last time I saw you, the homework question, Ronette. It's just so brilliant for so many reasons. But it also has this idea. And what we're not doing is performance reporting, okay? What we're not doing is performance reporting. What we've got is a balance sheet with equity at the bottom. But in equity, there's two reserves, right? And you've got to find out what goes where and why it goes where it goes. Well, actually, the way that this works, nothing is ever as simple as, something that can be summarised in one sentence. In corporate reporting, everything has always got layers of complexity. But essentially, keeping it simple, the way it works is like this. Anything that goes through the P&L ends up in the P&L reserve. Anything that goes through the OCI ends up in the OCE. That's it. My throat is completely battered and my tea is gone. Oh, it's a tragedy. Did you just see that disappointment on my face? That wasn't fake, that was real. But fortunately, I've got some water here. Oh, my throat is really sore. I'm sure I'll be fine next time I see you. I'm okay now, because I'm perfectly well able to describe performance reporting and the reserves and how they connect. Let's do it a little bit more formally. The P&L sits at the top of a communication statement called the performance statement. There's the P&L there, the profit or loss. And at the bottom is this other thing called the other comprehensive income. And a whole load of rubbish goes through other comprehensive income. But no one ever calls it the other comprehensive income. Everyone always calls it the OCI. And no one ever calls it the profit and loss. It's always P&L. And also over here on the balance sheet, you've got 4 buckets for the equity. The 4 buckets, again, all abbreviations, SC, RE, OCE and NCI, all abbreviations. And the middle two, they're called the reserves, the RE and the OCE. And the way that they work is that the RE is retained earnings, but it can be quite nice in this game to call the RE P&L reserve. Because then you get this language. Anything that goes through the P&L report ends up being accumulated in the P&L reserve. So the sales end up in the P&L reserve. The cost of sales ends up in the P&L reserve. Because anything that goes through the P&L ends up in the P&L. Anything that goes through the P&L report ends up in the P&L reserve. But it's the same idea with the OCI and OCE. Anything that goes through the OCI is accumulated in the OCE. And of course, this goes through the OCI. So, where are we now? If I take you up, you can see all the way up there. Oh, it's a long way away, isn't it? There we go. There's the theory just popping up over my shoulder. Now, you can see that we were told that and that language was really technical, but you can actually see it now. It's still difficult, but a lot easier than it was. The retranslation of the cost of the investment in the foreign sub. That's, you know, saying, what's the 1200 worth now? What was it worth when we bought it? That's what that green thing is saying. The retranslation of the cost of the investment in the foreign sub is answering the question, what's the 1200 worth now? What was it worth when we bought it? That is that thing. And that subsidiary translation, I've said that wrong, that subsidiary translation goes into the OCI, which is a performance report. And you're saying to me, Martin, I'm doing the balance sheet. I don't want to know about the performance report. Talk to me about the balance sheet. Ah, yes. But when you're on the balance sheet, anything that goes through the OCI ends up in the OCE. Which means this, therefore. Which means this, therefore. The figure of 71, bap, bap, we drop it here. And add down. And add down. Like so. And that's it, we're done. Okay. There's a confession I have to make on behalf of the examiner. For many years, the examiner insisted on sticking his 71 over there in the retained earnings, which frankly was wrong. But it was something that he did do for many years, and therefore if you stick your 71 over there in retained earnings, you will be marked right. But now the examiner is putting this in the right place, so my suggestion is to you, put this in the right place, put it in the OCE. Okay, I'm going to have a quick look at the chat and then I'll slap this on the face. I don't know why I feel like looking at the chat now, but I do, so I will. No, Ahmad has got a question. No, Forex is not only done on the investment. Forex is done on two things. Forex is done on foreign, can't use that pink, that's just so horrible. Forex is done on foreign transactions and Forex is done on foreign subsidiaries. Two things, not one. More about that in a moment. But basically, you guys seem okay just to crunch the numbers and see how it goes, and that's the way to be, really. So we've got three figures. We've got 80, just right at the top of the page there. 80 is the NCI. 80, 18, 080, and 71. Some funny numbers. 18, 080, 71 and 80. Excuse me. 1, therefore 7 plus, well, how do I do this? 7 plus 7 is 14, 8 plus 8 is 16, and 16 plus 14 is 30. Oh, and the balance sheet balances. What's the chances of that happening? Absolute zero. And it feels like this question is finished. And of course, this question was asking for P&L and balance sheet. We've done the balance sheet, now we'll do the P&L. So, fresh new brand new page. Let's have a go at the P&L. P&L, there we go. I think I will have a fresh new brand new page. Group P&L. I always stutter at this point. because that is a lot of columns. And I can hear you saying, "Ah, come on, Martin, there is only one subsidiary." And then you're saying, "Oh yeah, I get it. First of all, we do the parent in shillings, then we do the sub in kwacha, then we get the sub into shillings, then we make our adjustments, and then we do the group." And there are very good technical reasons for doing the P&L like this over my shoulder. There are actually some very good technical reasons, but those technical reasons only really apply to people doing this process in real life. If you have a small group with one parent and one foreign subsidiary, or indeed one parent, lots of local subsidiaries and one foreign subsidiary, if you've got one foreign subsidiary, then almost certainly this spreadsheet, it's basically a spreadsheet, isn't it, that I've produced over my shoulder. This spreadsheet that you see just above me is the way that one would produce this P&L in real life. And I have to say, for me, it works really well in the examination, but I do accept it's a lot of columns. So if you personally want to play with the schedule to make it work for you, please feel free to do so. Please do feel free to do so. This is the classic way of doing it, though. If you don't want to think and you just want to do what everyone else does, this is what almost everyone else does. But there are actually a few different varieties that work just as well. So if you like this, go for it. If you want to play with it, you go for it. Here we go. Revenue. So I have absolute control of my own sales and absolute control of the Malawi sales of 1,700, but they're described in kwacha. The sales were over the year, and therefore I use the rate over the year to get them into dollars. So 1,700 divided by 2.2 is 773. And you might recall me talking about the adjustment column. The adjustment column is for when the parent trades with the sub, or indeed the sub trades with the parent, intercompany transactions, intra-group transactions, transfers of stock, all sorts of different names they go by. But you know, when one entity sells to the other entity, which does happen in real exam questions, but of course not in this baby question. So we add across 28,000 plus 773. Gives us, 28,773. And then I've got operating costs. $527. Then we have OP, standing for one of the profit figures. There are no marks for any of the profit figures, so we scratch it out because there's no marks. What does OP stand for? What does OP stand for? Operating profit! Where's your shit? Do you remember that slight insanity that I acquire when I get to operating profit? Where's the shit? 2 marks available for the associate. All right, I admit in this case there is no associate. But in your exam, if you have a P&L, there will be an associate. It will be worth 2 marks. Make sure you go hunting for it, because it'd be easy 2 marks, as it was in pedal, saddle, handlebar. Of course, handlebar was the associate there. Okay, so this one doesn't even have any finance. It drops down to tax. 86. Well, hello. Who sits between Pat and Pam? NCI. Pam is profit attributable to members, and there's no marks for Pam. Pat is profit after tax, and there's no marks for Pat, but there is for NCI. So what we do is we add down for this blue fella, we add down for this blue fella, and then we multiply by 10% to give us the current NCI for this sub. $160 multiplying by 10% gives us 16, and in the real exam of course there'll be two subs, and therefore the 16 would be added to the other NCI, but in this case it's just one sub, and we've finished. That's the end of the answer. But I want to do the OCI. The examiner has not asked for an OCI, but what if he does? All you do is just keep going. You know, literally just roll on. Group OCI. There are in fact 5 things that go through an OCI. 5 things, all 5 of which I'll be teaching you next Friday. But here we only have the one. It is the 4x on the sub. It's a figure of 71, and if you're looking for a column, it goes in the parent column because of course the 1200, the 1.2 million kwacha belonged to the parent, and it works like that. There you go. That's it. You're finished. Yeah, okay. You're finished. Which brings us to 8:05. Only 25 minutes. I was hoping for a full half an hour, but never mind, that's okay. Homework. There's a shocking word for you. What I'd like you to do with homework is skip over Xenon. I'm not feeling Xenon so much. It's okay, but there's what I believe is a better question, a more modernised question that's just a bit further on. I'm just going to bring it up in front of you, and I'm going to go slightly crazy and even beyond the question extreme. Can you find the question extreme? There it comes. Can you see that title there in front of you? You can see that question extreme is like a puffed out version of the question Kenya, and it is a little extreme. Let me talk to you about what extremity we have with extreme, or what can happen in real life. I don't feel like overdoing this. I did overdo it, I think, when I did this on Tuesday, so I'm just going to pull back a little bit here. Before I do, I'm going to blow my nose. Excuse me. And, no, that doesn't quite work. It's better. And talk to you not about extreme just yet, but talk to you about, a pseudo-real group. A real group. Say, for example, you're in a group that has, for the sake of argument, 10 foreign payables, but also has 3 foreign subsidiaries. So it's 3 foreign subsidiaries and 10 foreign payables. How many 4x's would the entity have? The answer is it would have 13 4x's. 13 gains and losses on the retranslation of foreign stuff, basically. So 13 4x's. How many of those 13 4x's would go in the performance report? All 13. But where would they go? The 10 on the foreign payables would go into the P&L report, and the 3 on the foreign subs would go down into the OCI. Now that could be quite a realistic situation, but you've guessed, of course, that's not the case in the question extreme. The absolute extreme that you can have is only 2, which is 1 foreign payable and 1 foreign sub. In fact, that would be really rare. Much more common is you have 1 foreign payable or 1 foreign sub. But this one's got both. And the reason it's called extreme is because it is at the extreme. But it's still not really that extreme, is it? If you flick down, you can probably just about feel it, actually. Do you see right down at the bottom of the second page, there are 2 currencies to consider. There's 2 exchange tables given there. I've got this horrible pink again. Can you see there's dinars and crams? So you can guess probably that, I think crams is the sub. Is crams the sub? Crams is the sub, and therefore dinar is the foreign payable. And the gain or loss on the foreign payable goes up into the P&L, because that's the rules, and the gain or loss on the foreign subsidiary goes down into the OCI, because that's the rules. And that is the most extreme that you could get. Which means, therefore, the wonderful question extreme is as hard as you could ever get on Forex. It is the extreme. It's a beautiful question. I highly recommend it to you for homework. But may I reinforce this? Not before you've done Ronet. The question Ronet, which you picked up as homework last week, that has been recorded in the library, that's your number 1 homework. If you've done it already, fantastic, do it again. If you haven't done it at all, get into the library and do this question Ronet, because it is a fabulous question that brings together the process of consolidation and really, brings you together and makes you make the jump between the knowledge that you're attaining at the moment and the examination technique that you'll be needing once you get into revision. Okay. So yes, I am bigging up the question extreme, but I am also bigging up the question Ronet from last week. Which brings me, therefore, to the last 20 minutes, and it's time to look at cash flow statements. And is there a title just waiting over my shoulder? I guess there must be. There it is, cash flow statements. There we go. And I'm going to, open up a new page, and we're going to do cash flow statements together. Well, kind of. We're going to get started. In theory, there's just 2 things to learn under the heading of cash flow statements. Really, the 2 things are how to measure cash flows and how to lay out the statements. And that's it. So in theory, it should be dead easy. Somehow it doesn't work out like that. And what we're going to be doing next time that we meet is the question ducky. The question ducky is the second question in the chapter on cash flow statements. The reason we're going to do ducky together when I see you next time on Thursday is your third piece of homework is to do Squire. So yes, you need to pick up the complex group question, Ronet, from last week. From chapter 2. From chapter 3 that we've just finished, you should be looking at the question extreme to get you really into the extremes of Forex, making sure you're very competent with Forex. But also in preparation for next week to help you on Thursday, what I'd like you to do over the weekend is the question Squire. And you've probably guessed what I'm going to say about Squire. Part of the reason we're doing ducky next week is it's the best question. It is the best question, there's no doubt about it. So we're going to be doing the best question together when we see each other on Thursday. But there's another reason why I'm doing ducky and not Squire, and that is, you've guessed it, it's already recorded in the library. So when you come out of this channel, you go down to the bottom into the red and grey button called Tuition Library. You press that button, you go into chapter what will it be? Chapter 4 on cash flow statements, and you will see labelled there as Squire, and you work it with me. Okay? So what I'm going to do is I'm going to kind of, give you the baby steps so that you can make the leap into the question square. And then we'll do question ducky next time I see you, and then we'll sort it on CFS. So what I'm going to focus on is cash flows, not so much the statements, but cash flows. Statements is just learning the statements, just learning the pro forma. But cash flows requires a little bit of technique. So let me show you technique. Cash flows are measured using workings. And I am going to give you an example of a working so you get the idea. There is no doubt about it, the place to start with cash flow workings is with PPE. Because I can show you that there's an intuitive backdrop to these mechanical workings. And I can show you that providing you're cool with the phrases current and comparative. Current is this year's figures and comparative is last year's figures next to this year's figures for comparison purposes. It basically means the opening figure for the current year. So what we used to have was 10 in PPE, and what we have now is 12, but we also had depreciation of 1. And what is required is the cash flow. And to get into this, we need to understand the politics of this question, the way that the game is played, the rules of the game. What the examiner has told us in a question like this, indeed in the question waiting for you in the examination, is he tells you, I have told you everything that you need to know apart from the cash flow. Apart from the cash flow, I've told you everything you need to know. So just using that, can we use our heads to try and work out what might be going on here? Well, the assets started out with 10 and then it went down by 1 to 9. Somehow it ended up being 12. There's a 3 difference between 9 and 12, so it went up by 3. But how did it go up by 3? It doesn't say in the question. The examiner has told us, the only thing he hasn't told us is the cash flow. So cash flow purchases must have been 3. Exactly, so that's how the game is played in terms of the logic, but it's not how the game is played in terms of how it's laid out. What we do is we lay out this thing called a cash flow working. So let me show you how a cash flow working looks. It has a heading, a cash flow working has a heading. This one's called PPE, and then it has an opening balance, and then it has a closing balance. And what we do is we look at what we used to have, which was 10, look at what we have now, which is 12, and the opening is positive and the closing is negative, like that. And then what we do is we ask ourselves this very reasonable question about the depreciation. We just ask ourselves, what did depreciation do to PPE? And the great thing is, there are only 2 possible answers. The 2 possible answers are down or up or down. So what did depreciation do to PPE? It made it go down. So we put a little sausage around that. We fry it in a sausage, we make it negative, and then we add down, and as you can see, we get -3. And that is actually 2 pieces of information. First of all, we know that the cash flow is 3, but also because it's frying in a sausage, because it's in a bracket, we know that the cash has flowed out. And that is how the game is played. But with more players. You wouldn't get just 3 pieces of information, you get loads. So let's have a more rigorous example, a more challenging example. But we'll stick with PPE because it's a really good one to get into. So I used to have 70 and I now have 100. And then I've just got lots of data. I've got depreciation of 6. I've had a revaluation gain of 5. And I've got an impairment of 4. And then there's a couple that may not be immediately obvious. There's a sub acquisition of 10 and a sub disposal of 11. And these are more obvious once you're into the examination and you understand the rules of the game. But just as you're setting off, it's not immediately obvious what that means. What it means is that a sub has walked in with some a sub has walked in, and with it, it has brought some PPE, is what it means. And it's entirely intuitive. When a sub walks in with stock, stock walks in. When a sub walks in with receivables, receivables walks in. When a sub walks in with a tax liability walks in. And when a sub walks in with PPE, PPE walks in. And when a sub walks out with PPE, PPE walks out. Okay, that's the idea. And then there's various. So this is the thing. You see, there's lots of things going on, and one of them is in paragraph 6. The other ones, the other ones, a couple of them in paragraph 4, and then there's some information here. The trouble with this information is it's not presented in a line like I'm presenting this, and it's got weird words like this one. You might have finance additions. What on earth are you talking about? Finance additions of 3. Finance additions of 3 means finance is walking in of 3. I've got my hand below the line here, haven't I? Down here in liabilities. Exactly. It's like, what's that got to do? What it's telling you in this story when you're told about finance additions is that what has happened is PPE has walked in with corresponding finance. Now, we're not bothered about the finance. As you can see, my hand is below the desk. So we're not bothered about the finance, but we are bothered about the fact that PPE's walked in. As far as we're concerned, these are additions to PPE. They're additions to PPE backed up by finance, but all we're interested in is the effect on PPE in order to measure the cash flow for PPE. So required is cash flow, and the answer requires a PPE working, that works like this. Have I got myself into a bit of a tangle here? I think I have to do fresh new brand new page, because of the length of the pages that are here. So I'll have to go fresh new brand new page. So PPE. Opening and closing. We used to have 70, I think. We used to have 70, we now have 100. Sorry about the flickiness. We used to have 70, we now have 100. Opening raw, closing sausage, as I say. Opening positive, closing negative. And then we have depreciation, revaluation, and impairment, which you really should be abbreviating. You genuinely should be abbreviating in the exam. So again, a bit of jumpiness. We've got 654, that's nice and easy. So that's 654. What did depreciation do to PPE? Make it go down. What does a revaluation gain do to PPE? Make it go up. What did the impairment do to PPE? Make it go down. We'll just carry on with that. Then we have sub-acquisition, sub-disposal, and finance additions. Was it 10 and 11? Or 11 and 10? 10 and 11 and 3. So when a sub walks in with PPE, PPE walks in, making PPE go up. When a sub walks out with PPE, PPE walks out, making PPE go down. And when we get finance additions, we obviously get additions to PPE, making PPE go up. And then we measure the cash flow by adding down. That's good timing, we're on bang on time. So we get 70 minus 100 minus 6 plus 5 minus 4 minus 1 plus 3 gives us 33 minus 33. I'm rubbish with calculators, so have a go at it yourselves. Make sure that that's right. Yes. Property, plant and equipment. PPE stands for property, plant and equipment. It's a bit rubbish, isn't it? PPE, but it comes off the tongue quite well. But a lot better name for PPE would be tangibles. You know, because we have intangibles, we should have tangibles and intangibles. PPE is not such a great name, but that is the name it goes by. Always an abbreviation. No confirmation from you guys. Is 33 right, or is it just the internet slowed down a bit? Any 33ers? No? Should I do it myself again? Oh, no, it's right. Okay, just a bit of a delay. Right, good. Okay, so that is the cash outflow. So the cash that was spent on purchasing plant during the year was 33. Fantastic. And that's how you measure cash flows on individual assets and liabilities like PPE and associate and tax. Which brings me to the class notes. You don't have to do this, but I think you might feel comfortable if you do. When you work your way towards this question, Squire, just went a bit further there we go, there's Squire. As you work your way towards Squire, can I recommend that you have a go at the 3 questions on the page just before? They're very, very similar to the examples that we've just done, and they might just help to bring your confidence. Obviously, answers in the back, and also answers recorded online as well. I'll just change the scale so all 3 of them are visible on your screen at the same time. Where's my scale? There we go. So there's my scale. So there's the 3 questions that are non-current assets, PPE again, tax and associate. And I think you'll just, feel, really comfortable if you could have a go at those questions and, see if you can get into the groove of the way the cash flow workings work. And the reason that it's good to get into the groove of the way the cash flow workings work in isolation is when you get onto a real question like this one, Squire, there's a lot going on. If you'll allow me, it's very flicky, I realise, but if you allow me to flick through, that's a lot of information for you to cope with. Right, so the questions are long in cash flow statements, and there's a lot of information to cope with. So if you're not quite sure where you're going with the workings, it can undermine your confidence and be distracting. So have a go. I would recommend that you have a go at the basic introductory questions, example 1, 2, and 3 in the introductory section of cash flow chapter before you have a go at Squire. But as I say, Squire is homework, and I'm keen for you to have a go at it. Which brings us to time. And therefore time for me to bring up the slides. I'm just a touch ahead of time, which is good actually. I'm pleased with that because, I want to reinforce a couple of things. So over my shoulder we have what we have just done, which is foreign currency, and as you can see on the right hand side I've got 2 homework questions, which is extreme and xenon. Actually, to be honest with you, I think xenon, unless you have loads of time, xenon's a good question, but xenon is not as good as extreme, so I'm really keen that you do extreme. But, really, to be frank, you know what I'm going to say. Before you do Xenon, make sure you go back and do Ronet yet again, because Ronet is such a good question. Such a way of, bringing things together. Really lovely question. So Ronet from chapter 2, Extreme from chapter 3. Once you've done that, you should be at this stage. Yes, indeedy. You should now be able to translate foreign transactions and translate foreign subsidiaries, and I'm sure you can. And then you can see my email as well there. If you have any problems, just email me. And then we'll look forward to next week. And I do want to speak, a little bit about next week, because it's going to be a little bit weird. Just the Thursday is going to be weird, and then we have the Friday. you're going to have a real chalk and cheese 2 hours where we're going to, bash numbers for a whole hour until our brains are bashed. And then, we'll come up and breathe the air for about 2 minutes, and then we'll be into chatty, narrative, touchy-feely stuff. And these 2 subjects that we have ahead of us next week are going to feel like chalk and cheese. They really are like chalk and cheese. So that's the plan. As it happens, just between those, once I've done the cash flow statement and before I do current issues, I'm going to use that as the point for telling you how the exam works as well. So I'm going to tell you how the exam works next week, because you'll have enough information to understand what it is I'm communicating. And you'll have loads of homework by Friday evening, because actually when I see you on the Friday evening, we get into proper corporate reporting, financial reporting as it's usually called, with lovely stuff like performance reporting and provisions. You will enjoy that. You will enjoy that. That's proper financial reporting, and some of it to some of you will seem familiar. To all of you, it'll seem very, very useful. It's really good stuff. It's classic financial reporting. And just to come back a little bit, no, you're not going to feel quite so comfortable with current issues. That's going to be a strange one, and I introduce it early because it does take a little bit of getting used to. All right, guys, that's time, and I wish you a fabulous weekend. Work hard, and I will see you next Thursday, or indeed next Tuesday, for another session of P2 Corporate Reporting. Have a wonderful weekend. See you then.